It's hard to think, isn't it, of anyone who has not been impacted by the COVID pandemic this year. But it's been a particularly galling time for businesses, and in particular those that have been forced into lockdown. Now, we can hope that 2021 will be a more prosperous year, but with many of the stimulus measures set to run out early next year, it's all pretty hard to predict. I wanted to discuss the year in business and maybe offer a prediction or two for 2021 with business commentator of the Herald Sun, Terry McCrann. He knows the scene backwards. He's on the screen there in a very vibrant red jacket. Terry,
great to catch up with you, Michael. Before we say goodbye to this extraordinary, very, very strange year, I think when you look back over 2020, it's sort of been populated by moments of where we would say, what the heck just happened? I mean, from the COVID crisis to obviously what happened in the economy and to what the various governments did, not only obviously in Australia, but around the world.
Well, indeed. Of course, unorthodox times call for unorthodox measures, and I suppose we've borrowed like it's going out of fashion. But I was looking at some of the figures. I referred to it yesterday as a debt pandemic tangential to the health pandemic. The numbers I'm seeing are that this year global debt increased by $15 trillion. It's now likely to exceed $277 trillion. By 2030, the International Institute of Finance reckons global debt could total $360 trillion, which I suppose is half a quadrillion, whatever that is, Australian dollars.
I'm not sure what the next one up is. Yeah,
no, no one knows. I guess so, but I mean, here we are. I suppose the big question is, can it all be serviced?
Well, I mean, right now it looks like free money because of what the central banks around the world have done with interest rates by forcing them down to zero pretty much around the world and pretty much across the board, you know, from cash rates, immediate rates, out to 2, 3, 5 and even 10 years in some cases. So it looks like this is the ultimate free lunch. We can just print the money, we can create the debt, and we don't have to pay any interest on it. It's sort of, you know, again, it's sort of another one of those what the heck just happened moments that all our lives, Michael, we've thought that if you want to borrow money, you have to pay somebody an interest rate to lend it to you.
Yeah.
And if you want to borrow more money, you have to pay higher interest rates. And we've seen time and again with countries like Greece, Argentina, banana republics around the world, and obviously probably the biggest of our recent lives, Zimbabwe, that the awful mess you get into when you get into this cycle of borrowing more and more money, paying higher and higher interest rates until the whole thing blows up. But that hasn't happened. And there's no sign of it happening going into 2021 or indeed some years beyond that. But you come back to those ginormous numbers that you mentioned, you think that there has to be at some point some sort of accounting for all that at some point somebody's going to say the emperor no longer has any clothes, and if you're going to borrow all that money, you're going to have to pay a reasonable interest rate, and this is individually and globally in entirety.
Well, not only does the emperor not have any clothes, he's, I think, guilty of indecent exposure at these levels. But, I mean, you know, someone out there is obviously owed a quid. This is the question I'm always asked, and I can never answer it. To whom is all this money borrowed or owed?
Well, it's the people that have lent it, quote unquote, are either central banks themselves, they've just created the money, or and they hold it. You see the balance sheets of the central banks. The government our federal government owes more to our central bank, which is actually the government. So it's owing the money to itself than it does now almost to everybody else that it's borrowed money from. But the ones that it's really borrowed money from are primarily, obviously, investment funds, superannuation funds and the like. And again, this has been part of the thing that's been able to work, is that it makes good sense for them to own government bonds paying zero interest as part of their general portfolio, shares, property, all sorts of other more exotic investments, and that core of government bonds where they are pretty confident that when those bonds mature, they'll get at least 100 cents of the dollar back. They won't earn any interest along the way.
Yeah,
or very little interest.
yeah, quite right. I mean, it's interesting, isn't it, Terry? You have a lot of people that bang on about the beauty of the free market and how, as a principle, it should be able to operate. And yet I think all my lifetime I've never seen a free market operate anywhere, certainly not in energy, but now globally, when it comes to, say, property or money lending. I mean, look at property, for example. Between the Reserve Bank and the federal government and state governments, they've done everything possible to artificially stimulate the property market, fearing that there is a massive amount of overcapitalisation there. And if, again, the Emperor was to sort of flash himself in the middle of George Street, the whole thing had come tumbling down.
Well, you captured so many things there, Michael, with that comment, yes, the idea that, to misquote a famous quote, the free market has yet to be found, and when found, put in a museum, because it doesn't exist anywhere in the world. And anybody that thinks there's a free market operating, and the one that you mentioned is particularly important to both of us, and indeed to everybody watching, the energy market, the idea that, you know, the sort of rubbish that comes out from the climate change fanatics that say, let's have a free market in energy, but with that asterisk, we will penalise coal and fossil fuels generally, and give some sort of a subsidy to wind and energy. Now let the free market work. I mean, give me a break. There is no free market, as you say. But to go back to your point, specifically in relation to property, there's two levels to the property issue. One is the what I call the second-hand property market, all those houses that are already out there and built, and the new property market, which is the construction sector. And the Reserve Bank sees the property construction sector and the government as well, as the easiest part of the economy to actually get things happening. So when they want, you know, to create jobs and create spending and create income. So it's sort of the first port of call, that and infrastructure. Let's build some more flats, let's build some more houses, let's build some more bridges, let's build some more train lines. And that gets and we'll subsidise it either directly, as you do with infrastructure mostly, or indirectly by force-feeding loans to the property sector with zero interest rates or close to zero interest rates.
Well, heaven forbid we build a new power station or a dam. I mean, geez, that'd be awful, wouldn't it? Hey, let me ask you, Terry.
Exactly.
But before you go, your predictions for 2021. A lot of people want to have a bit of an idea what your crystal ball's reading there.
Well, we're in a race between the vaccine and the end of all the stimulus, particularly the government stimulus, JobKeeper at the end of March. So it all turns on the vaccine, just as 2020 all turned on the virus itself. If we get a vaccine that is effective globally and pretty quickly, that it gets distributed quickly, 2021 is likely to be a spectacular boom year, because you'll have the vaccine and the ability to open up the economy globally, and all that stimulus that we've been talking about on the monetary side, not on the government side, on the monetary side, that will still be there. If we don't get a vaccine, we're going to have something like a repeat of 2020 in terms of lockdowns and economic disruption. But we don't have quite the ability to further stimulate the economy. So if we don't get an effective vaccine, 2021 could actually be the bad year that we thought we were going to get in 2020, or the worst year that we thought we were going to get in 2020.
Because the stimulus isn't there to prop it up a second time, basically.
Exactly.
All right, well, let's hope that's wrong.